Hello everyone. Our main indicator, one of many, is volume profile. Now volume profile is something that um, if you take it away from me, I'm blind. I can't see anything. Volume profile is the beautiful colors that you see on the right hand side. This is where you could basically increase it, decrease it, sharpen the edges as you see, and basically smoothen the edges as well. It is a very important indicator. It gives you a lot of information, detailed information. But let's start from the beginning. How this volume profile constructs. How does it appear? What is it? Okay. We all familiar with the bid and ask. The market is nothing but bid and ask volume. Number of contracts sold and bought in the market. And the numbers are right here, as you see on this, for example, 60-minute candle. You see numbers of contracts bought and sold. This is the demand and the supply, of course, that controls the market direction. The more buyers you have, the more bullish move you will have, and the more sellers you have, of course, the price would go lower. Now, how can you read this? There is no way I could read it. Maybe you can, but I can't read this. I mean, I can understand. I can read the number 251 versus 543 here. There were more sellers than buyers, but doesn't mean anything. No, doesn't mean really much to us. A lot of people will focus on these numbers, but they don't mean anything. This is just basically the showing you the numbers. However, if I look at this candle and I want to determine the value areas, where did we have more trading, where was the volume at its peak, we cannot see it like this. We can see shades of color. We can tell like there's more interest in certain areas versus others, and you see the previous candle was red because there was maybe possibly overall more sellers, etc. But once you start getting the volume into this, let me just do this. This is the 1 hour candle. Let me just isolate it by itself. Once you get volume into this, you see that I'm gonna just press Control plus. This is one of the functionalities of this volume profile that we have, is you can reduce it and increase it and decrease it as you wish. Once you do Control plus to increase it, or now I do Control minus,
US 30.
I can tell we had very low volume area in this candle here between this price and this price. It's very obvious, as you see, low volume area, and we had some high volume area here and this level, and we have now a point of control. It's right here, which is in these numbers. Now, if you don't know how to understand, or if you don't understand these numbers, here you go. You have it here. This was the highest volume that happened during this candle, and then we had a little bit less here, still more than this one, and you have orange here, which is still good, high volume. Okay, so this is how the volume constructs, with the number of a supply and demand, number of contracts bought and sold in the market. Now, next thing is, what do these levels mean? Meaning, the market the price usually doesn't like low volume areas. The price doesn't like. Keep that as a reminder. Low volume area. So it's either price would reject from here, from this level from here, or it's going to go through it fast. Usually rejects first, second, and then maybe third, fourth time maybe will poke it and goes down lower. But that's a general behavior. There will be lessons and some rules on how to use this for trading, etc. But for now, you need to understand that volume is constructed with number of bought and sold contracts in the market. Okay, let's go see what we can do next. We all understand with one candle, not much volume to depend on. You cannot really trade the market and put your money into a trade depending on just one candle using this much volume. No, You need to see the big picture. You need to bring more candle. And the more, the good thing about this volume profile that we have, we designed it in a way, the more you bring in, that's what the volume profile will read. You see now we have more volume. Now this area that was lower than the top one, now it's reading, it has more volume because now we have 2 more candles in. So the more candles you bring in, the more volume you see constructed. Of course, you don't have to worry about the window being distorted or the volume being or looking ugly. Just, you know, control minus, bring it back in, and that's what you need to do. See, that's what you need to do. Just make it look better. And the more you bring in, the more volume you see. Now let's bring in more. And all of a sudden you realize that you don't even need to read these numbers. You don't even need to see numbers on the candles. Okay? Now this kind of a volume profile, this smooth looking volume profile, you don't see it in many platforms. Sierra Chart is one of my favorite, and I use it. I've been using it for many years. It's very smooth, it's very versatile. It has historical data where you could basically plot a lot of information, historical information that will help you with your trading. Now all of a sudden, now see, we don't need to see numbers. All of a sudden now we have volume. See, we have high volume areas here in this level, low volumes here. So in a nutshell, when the market was in this area, there was very low volume, and you see how the market rejected from it. See that? It's very low volume. My pointing is not the best, but you see it. You see you had here low volume area. Here you had an area where the market rejected at that time. Let's examine maybe what happened at that time, because now when the market went through this, came back down and rejected from here, volume created here, and it rejected again. But let's see what happened in this level when the market was here at that time. So let me bring this in. Of course, if you bring it in, if you bring the charts in, trying to bring the charts in, see? So the rejection was coming from a level that also had a different volume than the below and above. You see the yellow. So there's whenever you see volume changes or changing of color, changing of sizing, these areas all mean something, and within the continuous education we will learn what they mean, and of course how to use them. Let's keep this next thing in mind. The strategy that we're learning called for anticipate, confirm, execute. The volume profile is #1 tool that I would use for this level, for this thing, anticipate. So anytime I want to anticipate the market, volume profile would be my main indicator to depend on for that purpose. Of course, we can use it also for confirmation and combinations with other indicators, but for anticipation, this is key. If you don't anticipate this, if you don't use, or sorry, if you cannot anticipate the market's move, you cannot do confirmation and execution. Let's go to actually another instrument. Same thing with the pound US. We are at the pound US 60 minutes. Let's look at a 60-minute chart with actual candles. You see? It's very nice. Of course, we have different indicators in the chart. You don't have to worry about them now. We'll learn about them in the next videos. But for now, you also notice that, let's see, 5 minutes. Let's see if we have volume here. I don't have installed it here. But if you see, while the market moves, see the volume is not, it's building up here slowly, see? But it's not like, you know, we have volume in this area. Let me show you. We don't have volume. See this area, it's empty because of the highest volume was here. So now we have an empty area, not because we don't have volume in the past. It's just the window is not showing that much. The more candles you have in this window, the more volume we'll have plotted here, because this volume reads whatever you have inside this window, which is a very unique thing to have in this indicator. This is a 1440 minute chart. Another thing I want you to keep in mind, that you see we have a daily chart. You can see it also here. You can just click on it and do a daily chart here, daily, weekly, and you see 1 day. What's the difference between daily and 1 day? They look kind of similar, but they're not. Daily is historic. You can see basically historical data. 1 day is constructed from typing 1440 minute 1440, and then you press M and then enter. So 1440 M, enter. That is 1 day. Basically, each daily candle is 1440 minute. So you can do 60 minutes 60 M, enter. 15 minute 15 M, enter. And 1 day is 1440 M, enter. It's different because intraday is not historic, is accurate, is now. Historic is when you want to see a bigger picture, more historical data, and so on. So that being said, how do I read this level? See, we are touching a level that is very low volume, and the market has bounced from it in the past. If I put a line here, we see that the market has bounced. 1 second. This is a clearer line. You notice that the market bounced from this area multiple times in the past on a daily chart here. And now we are coming to it, and also bounced from the previous candle here. Now we're trying to break it. Now there is a chance for the market to go up higher to a next level, but you have to also respect that this area is not really high volume, so it might bounce from next. Maybe it can bounce from this level. Remember, any change in volume creates some kind of a hiccup for the price, right? Again, these areas are not tradable randomly. You can't. There's a system. There's what do you call a methodology to incorporate, but these levels are to watch for. One of the instruments that I like to trade is SPX 500. Also, we have the Nasdaq, but let's examine this. Their volume here was very heavy, and that's clearly logical because of what happened here. You see a lot of movement, and the markets have been very sideways and hesitant. This is going back a few months now. Actually, this is a daily chart, but if you don't see any volume on top, you need to go to a bigger chart. So let's examine the weekly on a historical data chart, and you see there is a reason why I have these two arrows for my top-down analysis. This is a do or die level. So if we break above this level, we might have a move through this area. Now, of course, there's a lot of things that will affect the moves immediately. News would be announcements, would be any political thing that happens, wars, natural disasters. But the market eventually goes to where it needs to go according to the logic of volume and, of course, supply and demand. Now, let's look at some of the things that I like to plot or look into before I set up my trading day, and this is something that probably will be very beneficial to you. Let's say I'm looking at the US oil, and I will realize there is a level here that the market might visit. See that 74, 74.40, 74.30 area. So I'll mark it, and I would realize there would be a continuation zone above it. Here we call this continuation zone. Here it has some hiccups, but it is a continuation zone. There's another continuation zone below, so if we get rejected, maybe we can have a continuation zone. This is a continuation zone. This is also a continuation zone if the market pokes through it. It might start with a rejection just like it started before, but eventually it's so any volume that looks the same, the color is the same, the size is the same, it's considered a continuation zone. And any two volumes that are side by side and they have a gap in between, that considered a rejection area.